Hello, good morning. Today we are going to solve a question on capital allowance. We're going to solve a question on capital allowance. Alive Limited commenced business on 1st November 2016, dealing in the sale of second-hand clothing. Mr. Dankwa, the owner of the business, produced the following as his qualifying expenditure: building, date of acquisition, cost, building, first January 2016, 689,000. Furniture and fittings, motor vehicle, computers, office equipment. New assets purchased during the year are as indicated below: computers, furniture and fittings, motor vehicles, building, specialized equipment, office equipment, specialized trucks. A motor vehicle costing 155,000 was sold for 357,000 on 18th August 2018. Included in the motor vehicles purchased in 2020 were 2 saloon cars valued at 715,000. Mr. Dankwa presented the following to you as his activities for the relevant years. Period to 31st December 2017, 1,150,000. Year to 31st December 2018, 823,000. Year to 31st December 2019, 705,000. Year to 31st December 2020, 695,000. You are required to determine the chargeable income of Alive Limited for the relevant years. Okay, so let's see how we can solve this question. So Mr. Dankwa started business on 1st November 2016. Okay, so this is where he started. And these are the assets he started the business with. And then he bought some assets along the line. So what we need to do is that we need to start with the time that he started the business. Okay, so let's see how to solve this question. So Alive with computation of capital allowance. Okay. So first of all, we need to put this asset in their various classes. So building is class 5, furniture and fittings is class 3. Motor vehicle is class 2. Computer equipment is class 1. Office equipment is class 3. So let me confirm. Okay, and then so we have class 1, class 1, class 2, class 3, and we do class 4. Okay, so this is 2016 year of assessment. Yes, 2016 year of assessment. So we have we will start from where he started business, which is 1st November 2016. 1st November 2016. So 1st November 2016 to 31st December 2016. Yes. Okay. So we have to put all the class 1s here. So class 1, we have only computer equipment. Okay, so 850.23. Class 2, we have motor vehicle. Class 2, we have motor vehicle, and then we also have class 2, we have motor vehicle 400,000. Only motor vehicle 400,000. So 400,000. Now class 3, we have office equipment, and furniture and fittings. So class 3, 308.23 plus 614.123. So this is class 4, class 3. Then we have class 4, which is building, 689,000. 689,000. Okay, so we have the rates. This is 40%, 30%, 20%, this is 10%. So the capital allowance will start from 1st November to 31st December, which is November is 30 months, then December is 31 months, so it will be 61. If you add the two, you get 61. So it will be 61 months. So capital allowance It's going to be like this. For class 1, it will be 40% times 850,000 times 61 over 365. Okay, so this our capital allowance for class. So we can do for all of them, but this one is 30%. This one is, oh, let me do it again. So it will be 40% times 850 times 61 over 36. Okay, this one is 20%. One is 10%. Okay, so our written down value will be this time minus this. So that's our written down value for 2016. So let's go to first January 2017 to first December 2017. So written down value brought forward. So you bring this ones, all the written down value for the previous years. Then we'll ask ourselves whether there was any purchase in 2017. There was any addition. So if we look at the question, in 2017, they bought only computers. The rest are 2018 and 2020. So computers 100,000. So addition for class 1 we have 100,000, but the rest are all 0, 0. So add the two. Add the two like this. Okay. And then we get this. So calculate capital allowance. This one is 40%. So this is for the whole year. So we will not apportion it by time. So 40% times this. We'll get, then you do it for the rest of the year. But class 4 is on straight line, so it means we will still use this figure because class 4 is straight line, so we always have to use the original figure. So the written down value brought down. So it will be this minus this. And we for all of them like this. Then when we come to 2018. 1st January 2018. 1st January 2018. Writing down value brought forward. So this one will come here. This all the years. Then let's see whether there was addition in 2018. In 2020 there was addition to furniture and fittings. So 253. 253,000. That's one. So furniture and fittings is class 3. 53,000. And that was the addition in 2018. So we come here, this this. Do this. Okay, so we have this, and then we ask ourselves whether there was disposal. So the question said, a motor vehicle costing 155,000 was sold for 357,000 on 18th August. 18th August, see. So that was in August. We made some sales, and the motor vehicle is in class 2. So disposal, the consideration we received is 357,000. 357,000. Okay, so there was no disposal here. So let me take this one off. So we bring the disposal here. Okay, now we add this as this minus the disposal you subtract. So we do for all of them. Okay, so that one is giving us negative. This is giving us negative. So we'll put 0 here. Okay, then capital allowance. This is 40%. So 40% times this. Okay. This one will be 0. This is 20%. And this one will still be, this one is 10% on the original because it's a straight line. That's okay. So writing that value brought down. So you subtract So let's go to 2019. First, 1st January 2019 to the 1st December 2019. So raising that value brought forward. Brought forward is this. So we calculate the factor for all of them. Then ask us whether there was addition. In 2019, there was no addition, and there was no disposal. So no addition, no disposal. So we go ahead and calculate capital allowance. So this is 40%. I put your 40% here. And this is 20%. This is 10% on the original. So go to the original. Class 5 is on straight line. So written down value brought down. So the reason that value brought down is written down value brought down with this minus this. Like this. Then let's go to 2020. Written down value brought forward 2020. So 2020 we bring this in yes here like this for all of them. Then we asked ourselves whether there was addition. 2020 there were lots of additions. We have motor vehicle building, office equipment, specialized trucks. And there's a comment here. Included in the motor vehicles purchased in 2022 were 2 saloon cars valued at 715,000. Okay, so let's deal with this. Let's deal with this. So the ad says that for non-commercial vehicle, the limits for capital allowance purpose should be 75,000. And saloon car is a non-commercial vehicle. And then we're told that they bought two. So it means 75,000 times 2. For the purpose of calculating capital allowance, the value that should be included in the calculation is 75,000 times 2, which is 150,000. 150,000. So let's look at addition. Let's look at motor vehicle it's class 2. It's class 2. So let's go to class 2 addition. The question said that included in motor vehicle purchased in 2020 were 2 saloon cars valued at 715,000. So this amount includes an amount of 715,000, which shouldn't be the case. We should have only included 150,000 instead of 715,000. So what we have to do is we have to take out the difference. We have to take out the difference out of it. Okay, so how can we take out the difference? So 150,000 minus 715,000. 715,000. So we have to take out 150,000. Okay, 715,000 minus 150,000. 565,000. 565,000 has to be taken out. It has to be taken out of the total amount. Well, this is the excess amount, which should not be included. Okay, so our amount will now become 565,000. 565,000. Okay, then 565,000. And then there was also a purchase of specialized tracks. So specialized tracks is also under class 2. So we add this one to 648,000. So plus 648,000 like this. Okay, so we have okay, let me see something. 715,000 minus no, the total amount of the motor vehicle was 975,000. Okay, so 975,000. So it means that we should have rather, let me start all over again. For class 2, we're told that included in motor vehicles purchased in 2020 were 2 saloon cars valued at 715,000. But the act says that non-commercial vehicles, example saloon cars, for the purpose of capital allowance, the value should be 75,000 each. So it means the amount that we should include for calculating capital allowance is 75,000 times 2. So that's 150,000. So that means the excess, or the excess must not be included. The excess, which is 715,000, must be taken away. So the excess is 715,000. So 715,000 minus 150,000. So this is the amount that should be taken out of the total figure of 975,000. Okay, so the amount that we should include in the calculation of capital allowance is 975,000 minus the excess, this one, 565,123. So yeah, so this is the amount that we should include. Okay, so that's level 2. So 4, 1, 1, 2, 3, 4. Then there was an addition of specialized track of 648,000. So we have 648,000 like this. So when you add them, it's 10,058,000. 10,058,000. Okay, so we're done with class 2. Okay, let's look at which is motor vehicle. So we've done this and then specialized tracks. So office equipment is class 3, 317,000. So class 3, 317,000. Then building, 925,000. So we said that buildings are not added together. They are placed in separate pools. The buildings class 4 and 5 are placed in separate pools. Okay, of its own kind. So we'll create another class 4 here, which is 10%. This is for the building. So this is class 4A, class 4, and class 4B will put the new building here. The new building, which is 925,000. 925,000. Okay, like this. 925,000. Okay, so what are we going to get? It's 0, 0. So to be this plus this. Here's something like this. We'll calculate our capital allowance. This is 40%. So 40% times this. This is 30. This is 20. This one is 10. And this is straight line. So go all the way here. Then this one too is straight line. Okay, this one is 10. This one is also 10. So writing down value, go down. We have this minus capital allowance. So you get the written down value for the various years. Okay. So we are done. We are done for calculation of capital allowance. So every year you have to add the total capital allowance. Every year you have to add the total capital allowance. So for year 2016, total capital allowance is this plus this plus this plus this. This is here. 2017, total capital allowance is that. 2018, total capital allowance is all of this. 2019. Total capital allowance 2020. Total capital allowance. Okay, so now we know the capital allowance for all the years. Okay, now let's go to the the question. The question says we should calculate the chargeable income of Alive Limited for the relevant years. So this is a profit that the company made for all the years. So period 31st December 2017. This means from the time that he started business to 31st December. And he started business on 1st November. 1st November. See, and he reported at the end of December. So we should know the profit for 2016. Okay, so profit. So let's the profit. We have 2016, 2017, 2018, 2019, 2020. So in 2016, the profit he made is inside this amount. The profit he made is inside it because period 2 means from the time that he started business up to the end of 2017. So it means that profit is inside this. So how do we find that profit? So how many months from 31st December 2017 from 3rd November 2016 November 2016 to 31st December 2017. That's 14 months. Because November, December is 2 months. Then the whole year, so it will be 14 months. So it means the profit for 2016 will be 2/14. Okay, 2/14. You apportion it multiplied by 1,150,000. 1,150,000 like this. Okay, so we are going to get this. Then 2017. So 2017 is a full year. So okay, 2017. This is 2/14. So 2017 will be 12/14. So that 12 plus 2 will give you 14. 12/14. So times 1,150,000. So 1,150,000. Get this. Okay, now the rest are full years. So 823,000. 823,000. 2019. 705,000. 705,000. 2020. 695,000. Okay. So then profit, then you add your capital allowance for all the years. So what was the capital allowance in 2016? Is this amount? What about 2017? 2018. 2019. 2020. 'Okay, so the chargeable income is the profit minus the capital allowance. So is the profit minus capital allowance. Okay, so in 2019 and 2020, you can see that chargeable income is zero. Okay, so it means the capital allowance is more than the profit. So there'll be no chargeable income. There'll be no chargeable income because the capital allowance is more than the profit. So the company will not pay any tax. 2019 and 2020. Okay, so this is how we go about this question.